Well, we're talking about GDP numbers at about 6.4%, slightly slower growth, etc. It's important to see the implications of that and whether something is showing up in sectors like real estate, right? So many linkages from that one sector and so important for the overall economy and, of course, markets as well. A recent Knight Frank report suggests that residential sales were at a 12-year high in 2024. They're also expecting strong fundamentals poised to sustain this year. We have Gulam Zia, Senior Executive Director at Knight Frank India with us. Gulam, we're chatting after a while. Good morning, Prashant this side. Thank you for your time. Happy New Year. So good to hear that you're...
And Happy New Year to you and your viewers.
Thank you. Thank you very much. Good to hear you're expecting strength to sustain. But is there any way to tell, Gulam? Are there any indications or suddenly, how does one tell? So far, so good. Sales are sustaining. There is strength, etc. For example, I'll tell you, I was talking to somebody in the hotel industry and they were saying that I was asking them how the season has been. It was interesting. The answer stood out. He said, well, it's been kind of sluggish this particular holiday season. And he said, well, one of the reasons could be because the stock market has been slightly sluggish lately over the last 5-6 months or so. For real estate, I think the linkage is there, although there's no way to tell how much. Just your sense, top level, high level thoughts, and then we'll get down to it in terms of specific things. Go on.
Well, you're absolutely right. Most of the monies that we were watching coming into real estate were on the gains that you made on stock exchange. And many of those, especially the mid to high end and the luxury, uber luxury segment, was thriving because you had so many IPOs, people pulled money out of stock exchange and so on and so forth and all of that. Most of it was coming because you're buying, apartments of 100 crore plus worth, maybe in a lot of them in Mumbai, but quite a few in Delhi. So when you're talking about some sluggishness, I'm sure it will reflect on real estate as well. But so far, it is not showing any signal of any slowdown because the numbers are very, very strong in the whole 2024.
And more importantly, looking ahead as well, it is looking pretty good, right?
Indeed. Because when we are looking at...
And the big markets like NCR, etc. as well? I mean, the NCR, Mumbai, etc. looking...
Well, NCR of all the top 7-8 markets, NCR is the only market where we have seen some slowdown, about 4 to 5% less volumes compared to 2023. That's the only market where we're expecting the number of sales to shoot up beyond 60,000. But it is the only one which has remained at 57,000, slightly lesser. But the signals are emerging straight away from Delhi. And I recall about 15 or 18 odd years back, it all started from Delhi. So I shudder to think that Delhi is giving some signals, but the other cities are yet not following because we continue to see growth in numbers of transactions.
Gulam, hi. We discussed this with Mr. Ashok Tyagi in the last week of 2024. I remember asking him exactly this. Is there too much of over-exuberance in the whole sold in 2 hours, sold in 1 day, whatever's been happening for a lot of, developers, including DLF. And he actually at that point in time told us that they have started taking some precautionary steps. They've increased the down payment, for instance, to ensure that there is a genuine demand, not the flipping. He says he's still not seeing the sign of the so-called flipping, which was the peak of the last cycle, where you buy and try and flip in 6 months. He says that's not visible just yet. But anyway, season's greetings to you and a very happy new year. So we need to watch for Delhi. That's takeaway number 1, Delhi NCR. But let's talk about the other markets as well. Let's talk about Mumbai. What do you see ahead here? Where are we in the cycle? Is a lot of this genuine, buyer demand? How much is investor demand? And where is Mumbai in the realty cycle? What do you see in terms of transactions, volumes and pricing in 2025?
When we average out, when we're looking at the macro picture, a lot of things are hidden in it, because when I'm talking about almost 100,000 number of units sold in primary market, which is when the developers are selling, almost about 98,000 apartments were sold in 2024. But then if you dig deeper, and this is the first time I haven't seen any other data provider talking about it, we have absolutely analyzed the upper end, because for last 2-3 years, everybody is talking about luxury. We tried to find out exactly what does it mean. So when we break it into various sectors, 5 to 10 crores, 10 to 20, 20 to 50 and 50 and plus, here a few signals are emerging. When it is absolute uber luxury or ultra premium segment, as we call it, 50 crore plus, In that segment, there is hardly any stress. The apartments are selling like hotcakes. And also the inventory, because ultimately when you look at the demand and supply scenario, the velocity of sales, whatever inventory existing in that category, which is 50 plus crores, will be actually exhausted within 4 to 5 quarters. But when you look at the very next segment, which is 20 to 50 crore segment, here we can clearly see some stress building up especially in Mumbai, because this market is very exclusive, Mumbai and Delhi alone. But in Mumbai, we see a lot of signals emerging, because the inventories have come in a lot in that segment. And we are looking at almost about 5.5 years to exhaust that inventory. And that is a sign of worry. That is a sign of worry, because in that segment, the velocity of, or rather the launches have been a lot. And that's where the problem is. Rest of all the other sectors are doing absolutely fine. Of course, the absolute lower end of the market, the affordable housing, hardly any inventory is coming in, and hence it is suffering. But the key takeaway is that the 20 to 50 crore, a lot of inventories have come in last 2 months.
That's a big headline, that in the city of Mumbai, inventory which is in the 20 CR to 50 CR bucket, there's 5 years of inventory right now in the market, and we need to see if it's exhausted that well. What about the buckets below that? What about, the definition of affordable is very different for Mumbai, but if you talk about, and let's also expand this to other markets like Bengaluru, etc. If you talk about the, 1 CR to 10 CR sort of broad range, which is, let's call it affluent housing, what's happening here with respect to inventory? Do you still expect the same level of absorption?
Well, I can generalize it. Except for this segment in Mumbai, everywhere else, I'm looking at 5 to 7 or 8 maximum quarters of inventory lying in the market, which means within 2 years, you will sell whatever wares you have, provided you don't launch any further. So which is where we are right now. Every market, except for this one segment in Mumbai, is in that 7 to 8 quarters of an inventory availability, and which is nothing to worry about, including Bengaluru. Even in Bengaluru, when we look at the 10 to 15 crore or 20 crore category, even there, it is not more than 6 quarters of inventory lying, which means even that is a very healthy market. In all of this, one market which is standing out is Hyderabad. Hyderabad is one market which is actually in price points as well as the ticket sizes are actually almost about Bengaluru or even beating in a few cases. But even there, the inventory in the mid to upper end and the luxury segment is absolutely in control, which means not more than 8 quarters of inventory lying in the market. So as I said, once again, except for that one category in Mumbai, everything else is like, at least now, looking absolutely all right.
Gulam, now let's do some stock picking with you. I say replace the word stock with micro market picking with you. Give us some ideas. I mean, if people have some real estate investment money lying around, what are the micro markets one should look at specifically?
Look, I'm very, very clear on this. For last so many years, almost about 12, 15 years, I'm talking about it. Don't punt on real estate. The real estate growth at 7-8% per annum kind of improvement of price appreciation is not the market when you compare with other investment options. So whatever sales we are talking about, even in the upper end, you're not expecting people to keep flipping. And I think you just about short while back, you spoke about it. Flipping is not happening. Perhaps the people are much wiser today. They know that you cannot expect the prices to double up in 5 years. Only then. I always tell people, if you're confident that whatever you're buying will give you 100% improvement in next 5 years, you should buy.
I get it, Gulam, I get it.
Options.
But there are lots of people who will not miss the money, even if they want to put.
They want to own a hard asset, for some of them.
For investment or for whatever, right? I mean, they want to park money. So for that category, and there is a category, there is that cohort of people, because so much money has been made through markets, through stocks, and here also the rate of growth is kind of start to slow down a little bit. Can't go like this forever. So naturally, you start to look at other places. So for that segment, Gulam, what are the best micro markets in that sense?
In fact, I'll only talk about 2 points. If you want to buy, invest in land, buy land. And there are a lot of developers who are coming up with these, large townships where they're selling land, because land is where you have maximum potential of an improvement. But that said, since we're talking about the luxury and uber luxury market doing so well, ultra luxury segment people are buying, here it comes to investment of passion. You're buying these apartments because you want to show the society that you have arrived. And that's what it is. When you're talking about the upper end, all these transactions are straight away hinting at that. Nobody is expecting the prices to double up. Like, for example, if you're buying an apartment for 50 crore or 75 crore, you're not expecting it to grow to 200 crore in times to come. It's only because you want this apartment and you will be staying in it.
But land where, Gulam? Sorry to press you. Land where?
There are a lot of these locations in the remote areas of these metropolitan regions of Mumbai, Delhi, Bengaluru, etc., which are improving by way of infrastructure connectivity. So you have a lot of these infrastructure pieces falling in place even in Mumbai. So when we are talking about, say, Vadhavan, the place where you are going to have a new port coming up altogether, absolute greenfield area, nobody has ever spoken about it. Otherwise, you have areas towards Bhiwandi or Panvel, even Panvel to Alibag are the locations where a lot of these developments are coming up because of improved infrastructure. Can you imagine by road traveling from Nariman Point to Alibag will not take you more than an hour in times to come with Atal Setu and a last mile also connectivity happening in a year and a half or two. So a lot of these infrastructure connectivities are going to improve your land connects around the cities, and that's where you have to look at, because that's where actually the improvement or appreciation will be the highest.
Okay, all right. Very, very interesting. Got it. Gulam, you know what? I will thank you because I think Prashant is just walking out to figure out his checkbook and, looking at his investments. I think the next couple of days he'll be making that long-term transaction. But jokes aside, thank you very much for joining in and educating us on what's happening. So the good news is that there is no red signal just yet, but we need to watch out for the category,
I'll tell you
the almost uber luxury category where there's a lot of inventory in Mumbai, 5 years of inventory. Got that. Thank you very much, Gulam.
And the other point, what he said, right? Delhi NCR.
Yeah.
That is a market which...
Typically, it signals that there's problem coming.
You go a little too aggressive. We've all seen it, right? 2007, 2008. So, and I think Gulam used that phrase, I shudder to think if we see a repeat of that, and that kind of becomes... but that's it's a very important sector for the economy, and it's crucial that the momentum in the sector stays strong. So far, it looks that way.